Hi, everyone. I'm James Garbutt,
And I'm Denny Dumas.
and this is the Garbutt Dumas Real Estate Podcast.
June 21st, 2023. We had another interest rate hike 2 weeks ago. Bank of Canada increased the rate 0.25%, which in return gets the banks to increase their prime rate. So prime is now sitting at 6.95. And I don't know how you feel, Jamie, but I think I'd like to start with an apology to our listeners. We made a lot of predictions coming into this year.
Yeah, we did.
We made a lot of predictions March, April, May, June of 2022, talking about where we think interest rates are going to go. And hindsight's 2020. We'll admit that. We're not
should also
in
not
any
be,
way
we shouldn't be
educated
predicting financial policy.
to be predicting rates. But at the same time, if you told me in March 2022, when I can't remember exactly what was prime, 2.4, 2.7, something in that range, 2.7 maybe. If you told me prime was going to go up to 6.95, I would have thought we would have a serious problem in Greater Vancouver real estate.
I think over the last decade, I've said multiple times, if rates get back up to like 5-6%, the sky's going to fall.
Yeah.
And I do believe over, you keep rates high, the sky will start falling more and more year over year. Clearly, the market or most people can handle this blow, even if the payments are high and painful. There's enough equity out there for the most, but that's just what we've seen over the last, say, 3 to 6 months looking backwards.
Yeah.
We look forward over the next 3 to 6 months, might start seeing more distressed sales start popping up. I mean, that's kind of the main metric that I look for.
Yeah. It's definitely affecting Greater Vancouver real estate, but I don't think it's affecting real estate in the way that we assumed it would. Like if you asked us these questions 12 months ago, I think we would have said market values will be down, activity will be down, listings will be sitting.
Yeah.
And none of those things are true. So yes, interest rates are affecting Greater Vancouver real estate, but not in the way that we thought. It's affecting real estate in the way that people are just not listing homes for sale. People are sitting on the sidelines saying, I'll wait till peak pricing comes back. And to be very honest, we're going to talk about this in the next podcast, but we're not far off that. And in some neighborhoods, we're above that.
Absolutely.
It really sheds light to me. And we talk about this often on the podcast, that what is our number one problem in Greater Vancouver real estate? It is we do not have enough supply for how many people want to live throughout Greater Vancouver. And this is just shedding more light on it. We have a serious problem in Greater Vancouver where there is not enough doors for people that want to live here. And all of these stats that we're going to share throughout the next couple episodes, this market update, and then we have a pretty awesome one coming up. So stay tuned for that one, of comparing prices throughout Greater Vancouver real estate from 2016 through COVID to today's prices. So that actually, even as a real estate professional who does this every single day, I was a little bit surprised by stats that I found, even just doing some of the research.
Yeah.
But I think quickly, just share your thoughts on supply and like how surprising it is with rates going up 4.5% or whatever the exact number is now, 4.5% in the last 12 months, of how little it's affecting price points.
I mean, the supply is pinched. There's no doubt about it. And I think that I don't know when the next world is going to exist in Greater Vancouver real estate where we're going to see across all property types in most cities, say a sales ratio consistently below 20%, meaning like lots of listings, low percentage of sales going through. It just seems so far from what we've seen for years. And maybe that time will come. But right now, like you said, the bank prime rate that's prevailing out there is 6.95%. We mispredicted that one. We shouldn't be predicting bank rates anyway, but we mispredicted that one. But I think the biggest shock for me is not just that the rate is that high and that it's been this long. I mean, it was expected that it would be up there for a while, but not just that the rate's this high. But if you look at the data, the number of multiple offers happening, the sales ratio happening, the data, when you look at the last 30 to 90 days, shows a very strong seller's market, and it shows prices holding. So not just the fact that rate is this high, but the data is that good in favor of the sellers in this environment. And that's the biggest shock. We're going to get into it because some of these areas and some of these product types are just outrageous.
Do you want to start with a few headlines, or do you want to start
Well,
with some sales ratios in different areas?
I think we should get into the headlines, but let's just go with like the macro of what the real estate board put out there for stats
Sure.
for May. And the first few days of in June 2nd, they released the May stats. I mean, that's history today, but I think it's good because the highlights that I got from the May stat release was that we're 6 consecutive months of price increases. So from call it December to May, prices have been going up. May sales were 15.7% higher than May of last year. So the sales volume was higher than last year, still below the 10-year average, but just barely at 1.4% below.
To put that in perspective, let's just make sure we note is interest rates started climbing at the end of March 2022. So May was maybe the first slowdown month last year. So it's not surprising to me that after 2 bank rate holds early this year, May sales activity was greater than last year by 15%.
If we looked at March 2022, it was a very active month.
Yeah.
May 2022, the market was already transitioning. So we're for the first time in months or a while, I don't know, I'd have to go back to see how long, but we're actually beating last year's sales in terms of volume. And I think if you look at January to April, I think last year's sales outweighed the volume from this year. But so our sales were 15.7% higher in terms of volume, and our listings were down 10.5% compared to last May. So I think that gives you a little bit of a clue on the macro of Greater Vancouver that listings are down, sales are up. That kind of explains some of the prices, some of the bidding wars, what we're seeing. Other highlights, the sales ratio across all property types was 38.5%. That means that, if there was 100 listings in the month of May, 38.5 of them sold in that month. Detached homes were the lowest at 28.5% sales ratio. Apartments were 45.5% and townhouses were 45%. And when a sales ratio, when a sales ratio is above 20% for a sustained time, they call that a seller's market with upward trending prices. So 20 listings out of 100 listings sell in a given month. That's the base of a seller's market. And across, we have 28.5 for houses, 45.5 and 45 for apartments and townhouses. So strong seller's market statistically.
It's actually, I'm looking at all the stats that I pulled up here, but it's actually slightly confusing, but interesting that overall May had more sales than last year. But when you look at like really specific market segments and types of properties, a lot of them were down. So I look at New West condos. May of 2020, sorry, this is year to date though. Sorry, that's where I'm getting confused. So May was the first month where we saw increased sales volume comparatively to last year. But if you look at 2023 as a whole compared to the first half of 2022, sales volume down significantly.
You're not wrong. I think it just shows that first 4 months of last year was so strong in terms of volume.
Totally.
But they May, I happen to have the stats, but the May condo sales in New West were 94 this year, 85 last year.
Okay.
I mean, we're gonna go area by area here. Let's not get ahead of ourselves. But I mean, I think May is the first month of this year where I can't remember April, but I believe May is the first month of this year where it had more volume than last year as a whole. Now you'll go into different areas and it's going to show you a little bit of a different story because, there's depends on how big of the sample you look at.
So, and keep in mind, May was coming off 2 rate hike holds, and June 7th they increased the rate 0.25%. So, do you think that trend declines moving through the summer as people see, there might be, the talk of being around rates now, again, we're not making predictions. We've learned our lesson, but the experts are saying there might be another hike either in July or in the fall.
I think June data should reflect May data similarly. Like I think June will be below the 10-year average or close to it. And it will probably be more sales than last June, and less listings than last June is my guess. Um, that being said, I think we're in a time right now where some of the market is holding on to a pre-approval of a mortgage rate that no longer exists. I'm on a lot of mortgage brokers' email chains, and I've noticed that the 5-year fixed has gone up in the last month. And I think right now, I think the best posted rate that was emailed to me was, I'll call it just over 5%. Maybe it's 5.05 or 5.1. And then that's up basically 0.5% from the bottom of what I saw it, say, a month ago.
Yeah.
So people that have a pre-approval and have a 120-day rate hold are in a window where they may have 60 to 90 days left to buy at that rate. And if they don't buy at that rate, then their mortgage goes up 0.5%. So that could be part of the market. But I also just think there's just a lot of people that want to move. And when the right house comes up, they go for it. It's not opportunistic investor type buyers that are driving this market. It's people that want a place to live or want more space. I mean, we've been in a few homes lately, and it does not look like it. I mean, I was in one in North Vancouver over the weekend, and the agent said over the weekend it was listed for $2.6 million, and over the weekend they had 100 people through the door. So, a good house, even if it is a higher price point, gets a ton of action.
It is crazy. Like, one of the things I wrote down coming into looking into all these stats in the last couple of days was, and this is just like a gut feeling based on what we're seeing day to day with clients, is that square footage is hot.
Yeah.
People are upsizing. The larger 1990s townhomes, we had one in North Van last week that set a record in the complex. Highest sale ever in the complex, and in a 6.95 interest rate environment. This is after the rate hike. Highest sale ever in a complex. And if you look next door, there's a complex that is newer but smaller and no attached garage, underground parking, and that condo or that townhouse complex is not seeing the same activity as this 1990s larger with detached or with attached garage is seeing. So, and then I've had some clients looking at like 2 to 3 million homes in Coquitlam, and a lot of them are selling with multiple offers, subject free in week one. Same thing in North Van. Had someone look at something that was listed 2.9 last week that's getting multiple offers today. It's strange. Have we ever seen luxury this active? Like this $3 million price point?
No, 3 million seems more normal than it did years ago.
Totally.
You know, a 3 million, 2 million is an older home in a lot of these markets, and 3 million is the base of a newer home that's, say, smaller. Well, it's not smaller, like a 3,000 square foot newer home in, North Vancouver. But I mean, North Vancouver, $3 million newer homes. I mean, a lot of the newer homes are 4 million and up. Coquitlam has a great supply of detached homes. Usually there's a good selection, but I imagine there's a difference between a poorly designed, poorly built $3 million home and one that's well designed, and the one that's well designed is getting all the action, and the one that's poorly designed is probably struggling on market.
Exactly.
Yeah. Quality matters. Spend time on a designer. Spend time on a home design. If you're spending $1 million on building a house or more, spend 5 to 10 minimum on a designer. Anyway, that's just some wisdom. Yes, you're absolutely right on the price point. Let's just touch on supply. This might sound a little redundant to anyone that follows real estate podcasts in the market, but the supply is a constant struggle and a constant discussion point in Vancouver real estate. I don't see any sort of light at the end of the tunnel. There are solutions to it, but none of them are easy. David Eby announcing no more single family zoning is a step in the right direction. Having cities implement that's another question. I'll believe it when I see it in some cities. New construction, I listened to a podcast this week, and it was an interesting note from a new development marketer that if you got the land for free, and let's just use Burnaby, Brentwood as a market, as an area, if the land was free, they need to sell the condos at $1,000 a foot to break even. So when you look at new supply coming onto the market, it needs to get, call it on average, $1,200 plus a foot, and a lot of these, like say Burnaby, in order to make money. So the new supply that will likely hit won't compete with the price points of existing supply. They'll be smaller and more expensive. And so that will keep the condo market pinched, or at least the new supply of condos coming in a little bit more expensive and not able to compete with resale. And then for townhouses, you and I both know, and anyone that kind of watches the market, they're not making enough of them. Like if you're looking at New West Burnaby or Tri-Cities, there's just not enough new townhouse developments going on, and single family homes, they're really not making more of them. There's maybe a few lots pop up every year, a few subdivisions happen. So houses will be pinched for supply. They can't make more of them. Townhouses, duplexes, well, they might make some progress, but it's going to lag behind demand. And then new condos are expensive. Call it 1,200 a foot plus.
The first headline I wrote down that I found was Vancouver sees big dip in construction of new homes. And what that's talking about is a lot of developers are sitting on the sidelines or putting projects on hold right now because of the interest rate costs. Like Jamie just mentioned, they need to sell a condo for $1,000 a square foot to break even without including the land costs.
If they got the land for free.
Yeah. So a lot of them, the price point of where they're going to sell a project if they launched it today is not going to justify the 2 years and cost involved in putting that project together. So a lot of them are putting projects on hold, which, guess what? Further increases the problem of supply.
So what I see unraveling, what anyone would see unraveling, is you have all these projects that are on hold, that are not launching because they don't make sense. And I've heard that Anthem's being a little more aggressive in this time. They're going right through, but a lot of developers just don't want to. They want to time that launch. They want it to hit. And right now is arguably feels like it could be a bottom of the pre-sale new construction market. I think it could get a little uglier over the next 6 months before the light starts showing. So between now to the end of the year could be a good opportunity for pre-sales because the incentives are starting to hit our inbox more and more these days. But yeah, there's a lot of, so right now, high rates, which is holding a lot of projects back. I imagine developers a lot of them are going to think alike. And next spring, if there's market momentum and rates come down a little bit or ease up, there could be a lot of enthusiasm for projects. A lot of project launches could happen at the same time, and a lot of construction starts could happen at the same time. So even though now it's expensive to build because of high interest rates, it could be more expensive to build in 2 years when rates come down, but the cost of labor and trades go up because of demand.
Right.
There's going to be an absolute rush of construction at some point. And I do feel there's going to be a whole nother demand side or struggle to get the units built that need to be built. Construction costs will probably go up out of this. And I think prices will probably follow.
One of the big headlines probably first 3 or 4 months of the year, it was very, very negative around real estate. And one of the big things was sales volume down significantly. They were throwing around numbers like 30, 40, 50% down. This was actually true, but the way that they were presenting it to people was a bit misleading. The real problem was there just wasn't enough listings for sale. Sales, and we're going to share some of this. And if you don't like stats, I promise we're going to make this super, super interesting. But the sales to active listing ratios are super high. Jamie mentioned early in the podcast, 20% is where, above 20% is where you see the term seller's market. And a lot of these, like I'm looking at, are 40% and above. And when was the last time we saw that? Probably early middle of 2021. Like when we saw the craziness, 2017, we probably saw numbers like this, but it's been a little while. And I wanted to share some numbers of these actual sales volumes. So what is happening right now? So comparing January 1st to the beginning of June for New West single family homes, we're down 32% in terms of sales volume, which means, again, there just is not a lot coming for sale. New West condos, down 36% sales volume from January to June. North Van houses look a little bit better. We're 21% down. North Van townhouses, 34% down. Port Moody condos are the only one I could find that actually has increased in sales volume comparatively to 2022. So there's been...
I think that's just a randomness.
It's totally randomness. Totally. Yeah. But the majority of them are anywhere between... like North Van homes, single family homes were the lowest at 21%. But the majority of them are between 25 and 40% declined. Port Moody townhomes, 33% less sales than 2022. Again, supply. There just is not a lot. Most properties that are listing correctly in the right range of list price are selling in a week and above list price. Just there's not a lot of them for sale.
I think let just touching on it, because we're going to go over different neighborhoods, different cities here in a moment, and just touch on the stats and what they mean to us. Because if you look at one stat, it's not telling you the whole picture. You're talking about sales volume. When you look at the number of sales in May versus June or year to date versus last year, it gives us an indication of how active the market is in terms of transactions. You can have a lot of sales, and the market could be a seller's market or a buyer's market. It depends on the sales ratio, or the other two things that we look at is the sales ratio, which is the number of listings selling in a given month compared to how many are listed. So if there's 10 listings on market, let's call it, there's 10 listings for houses in New West right now live, and last month 2 of them sold. That gives you an approximate sales ratio of 20%. So the sales ratio gives us a good indication of how much of the inventory is actually selling. It's a pretty good indicator, but it's also good to marry it up with other things. So if you look at that alone, and you can get skewed data in some markets. There are markets like Anmore, where there's a lot of high-end homes, and they often have a low sales ratio where a smaller percentage of them sell in a given month. But it doesn't mean that the market is downward trending there. It just means that there's a lot of luxury homes in a market where there's not enough demand for those luxury homes. And so we look at the sales ratio, we look at the sales volume, that gives us the activity, the sales ratio gives us the sell-through, but they can still be a little bit, sales ratio doesn't always give you 100% confidence. And to back it up, a stat that I like to look at, and Denny looks at as well, is just when you look at the last 10 sales or last 30 days of sales or last 100 sales, how many of them went in multiple offers? How many of them went for full price or above full price? And that gives us a good indication of, well, if you look at the last 20 sales for houses in New West and 10 of them sold above list, that was 50% multiple offers. Means that the good products that come onto the market are getting a lot of demand. So if the sales ratio was low for houses in New West, say it was 10% or 15%, but the 50% of the sales that are happening are getting multiple offers, that just tells me that there's a lot of dog product on the market, a lot of listings that are just not desirable. But when a good house comes up, it's very desirable. So let's go into it. Like, what did you find, Denny? What are you finding? Like, what are you seeing out there?
Do you want to start low or high?
Let's whatever floats your boat.
Okay, let's start low, because high I think is going to surprise you. Coquitlam, single family homes above $2 million. In May, there's 25 sales. There's currently 119 active listings. So that is a 21% sales ratio. Out of the 25 sales, 11 sold at or above list price. So just shy of 50%. What's that? 40 to 45%.
11 out of 20?
11 out of 25.
Out of 25. Okay, yeah. That's pretty strong.
But that is the low end of sales ratio that I could find.
That is above 2 million in Coquitlam. So just to put that in perspective, you get a lot of dreamers above 2 million. When you have an open list price range,
yes,
there are a lot of products that are priced at $3 million, $4 million that have virtually no buyers for them. So a 21% sales ratio for a high-end price point in Coquitlam, that's pretty strong. I bet you if you went from 2 million to 3 million and capped it, it'd be even a higher sales ratio.
It would be higher. Yeah.
Did you look at?
Do you want to see the high?
Yeah.
Okay. So I kind of looked at everything. So I've got North Van houses. I've got Maple Ridge single families at a 29% sales ratio. Langley 1-bedroom condos. Something that I was expecting to be a little slower, more inventory. Are people moving out to Langley for more space right now? But apparently people are moving to Langley for 1-bedroom condos. So there's 50 sales in May of 1-bedroom condos in Langley. There's currently 51 active listings.
Wow.
Sales ratio is essentially 100%.
There was a time 10 years ago where not just Langley, even in New West and Tri-Cities, there was periods when the market would slow and condos were slow. 1-bedrooms were slower.
Lower.
The thought was if you're moving from Vancouver to New West, or you're moving from Vancouver to Coquitlam, you want a 2-bedroom. You're going for more space.
Exactly.
Now, Langley, even further east, 1-bedrooms have an incredible sell-through rate.
So 50 sales, 22 of them sold at or above list price.
Wow.
Median days on market 9. And then you go
and I think the message there is first-time buyers, lower price point, strong demand. People want to own a home.
Totally.
Yeah.
Investment-wise too, SkyTrain's going out there. I think a lot of people are picking up condos as rental properties. And then Langley and Maple Ridge were very similar. Through COVID, saw these huge spikes in market values. And as interest rates started climbing last year, they had a really slow second half of the year, but they've bounced back significantly. Look at Langley Townhomes. In May, there's 112 sales. 112, that's pretty good. 133 active listings.
Yeah.
That's an 84% sales ratio. Median days on market 7. 84 of the 112 sold at or above list price. That's 75% selling at or above list price.
When my comment was about they're not making enough townhouses, Langley is making enough townhouses. So Langley is one of the exceptions. Well, maybe not enough, clearly, based on the sales ratio, but Langley is one of the markets where if you're looking for a townhouse, consider it, because they make a lot of them out there. Yeah, those are strong seller stats.
Huge.
How about I throw up a market here, Denny?
Let's see it.
We had a recent sale in Mount Pleasant, and I thought let's use this as an opportunity to look at the East Van condo market. So, Mount Pleasant is a desirable neighborhood in East Van, and it's doing pretty well, like not well compared to those Langley stats. But in the last 30 days in Mount Pleasant, 39% of the listings or condo listings sold above the list price. So 12 out of 31 sales were above list. The average sale price to list price was 101.2%. Average or median days on market was 8. And I guess in May 2023, this year, there was 50 sales in Mount Pleasant. And when you compare that to previous years, that's above last year, 2022 at 45 in the same month, and below 2021, which had 61. So it's not an extreme of anything. I think this is the data of Mount Pleasant condos, when I look at it, seems to be pretty close to the average of what we would see in most markets around Greater Vancouver. Some are doing better, some are doing worse. When I go further out to East Van, not just kind of picking Mount Pleasant on its own, the sales ratio of East Van condos in May was 42%. So there was 165 sales out of 391 listings for the month of May for East Van condos. Average sale price to list price was 100.5%. So on average, they sold above the list price, and about 40% of them sold over the asking price. Not too bad. Pretty strong data. It's like this just shows the anomalies. When you look at Mount Pleasant, there was more sales in May than last May. But when you look at East Van, there was less sales in May than last May. So that means it just means the sample's not big enough. But I would say May to May for East Van condos is pretty similar. 165 sales this year, 177 last year, 237 in 2021. So East Van condos, strong and steady, represent pretty typical market in this market.
Totally.
Yeah. Do you got another area?
North Van houses are interesting. So I've had a few clients looking at $2 million, kind of $2 to $3 million range in North Van houses. And so I looked at 2 million and above. So in May, there were 63 sales of homes 2 million or above. There's currently 152 active listings. That's a 41% sales ratio. Median days on market, 8. 35 of the 63, so over 50%, sold at or above list price.
Yeah. North Van housing market is hot. This is for detached homes?
Detached.
Just to help, I looked it up. Median sale price in May for North Van home was 2.2 million. And that gets you about like a 1970s home that's 2,500 square feet on 2 levels. That's partially updated on a quiet street.
Mm-hmm.
It's 2.2 isn't what it used to be in North Van. We're going to get into a podcast that compares 2016 prices to 2020 COVID, when COVID hit, to today. And North Van is one of the higher performing markets in that analysis. So, but a house in North Van.
Where do we go from here? What does the second half of the year look like? We've seen one more interest rate increase. There may be one more. What does the second half look like? Is there more supply? Do these sales ratios look the same in the second half of 2023?
I think the sales ratios are going to be similar. I think the supply is going to be lower. I think the sales are going to be lower, if I were to guess. Originally, there is a scenario where September, October could be busy, but I think just in a high rate environment, and especially if there's this uncertainty of maybe one more hike, I could see the fall just being low inventory, low sales, but the ones that do come on the market perform well. That's my broad prediction. I have another, I looked at New West, just a quick market update for New West. Condos in New West, on average in the month of May, sold for 101% of the list price. Median days on market was 8. 94 sales and currently 146 active listings. That's a sales ratio of 64%. Strong sales ratio for condos in New West. More sales in 2023 May than there was in 2022 May. 94 sales this year, 85 last year. And if you go back 2 years, 132. And in the month of May, 49% of the condos sold in New Westminster went above the list price. And just like broadly speaking, because we sent out a flyer last week, detached homes and condos in New West in the month of May, both of them were about half of the sales went over asking. So half of the stuff selling is getting multiple offers. Pretty strong market.
Seems like the majority of neighborhoods are roughly at that half range. Half are selling above, apparently except Langley.
Yeah, Langley's doing well. Langley's doing well. I kind of also wanted to look at townhouses, and I didn't want to be specific on one city because, if you look at New West townhouses, there's not many of them, and it might be skewed data. So I looked at townhouses going in New West, Burnaby, and Coquitlam, kind of a broad area. And in May, average sale price to list price was 101%. So on average, the listing sold 1% above the list. 8 days on market, median. More sales, 165 sales in May of, 126 sales in May of 2023. Of those sales, 50% of them went over asking and about another 10% went full price. So full price and over asking represent about 60% of the townhouse sales in New West, Burnaby, Coquitlam. And that was for the month of May. Pretty strong market there.
It's a good time to have a townhouse listing.
I found one dog in the, trying to find what's not selling, what's lagging. And not I mean, I don't think the land category in the MLS is usually some hokey listings.
Yeah.
But the land in Burnaby, New West, Coquitlam, Tri-Cities, Poco, Port Moody, 5 sales in May, 45 listings, a sales ratio of 11.1%. The sale price to list price average was 86%. So a small percentage of the land listings sold in May. On average, they sold for 86% of the list price. Land list, very skewed data, very small sample size. Land listings can be a bit weird.
That's vacant land?
That's vacant land, yeah.
It's really hard to get a stat for like land value properties because they're looped into detached and single family. So, but I think if we had that, the numbers would not look as good as this. No. It seems like the slower moving products are the original condition homes that need work, like throughout Greater Vancouver.
I should acknowledge that this is listings that are advertised as land, could be raw land, could be a house that's condemned. Yeah. If you took data of houses that were in real rough shape, but there is an existing structure on them, but they're the lowest price points of detached homes in their markets, the data is probably pretty strong because usually the lower price, even if usually an ugly house that smells bad but has good bones and a good layout, if you get a $1.3 or $1.4 million detached home in Burnaby, it's probably ugly. It's probably deemed land value, but it probably would sell relatively well in this market because there's, it's a price point that's gets someone out of a strata. It's a house. Anyway, Denny, anything else to share on the data you've seen for May?
I feel like we've confused people a little bit, but also provided a ton of information. No, I'd say my overall summary and thoughts is the market is more impressive and resilient than anticipated. And we have seen that through all the data that we've just shared through the first half of 2023.
I think it's the sales that are happening are doing well. I think in the remainder of this year, we're going to continue to see headlines about interest rates causing havoc. We might see more distressed sales show up in the fall. We're going to continue to see headlines about renters and the rental market and the demand for them and how strong it is. And when rates are this high and prices are this high, creates more demand for rentals. Any other predictions on headlines we might see that aren't out there today?
Well, speaking of your rental comment there, one of the headlines, rents have increased 20% from this time last year.
Yeah.
20% year over year. That's pretty bananas. That's not a sustainable growth pattern in any way. When you look at a one-bedroom condo that used to be $2,000 and now it's $2,500.
Yeah, I saw a headline, a Burnaby one-bedroom condo that's listed for $2,400 a month, got 180 applications. Now that was again, I hope this isn't clickbait. If it is, they got me. But that was a headline that I saw. So, and I believe that, that's not outrageous. 180 applications is a lot though.
That's a lot. Yeah. That seems low. Assuming this is in a pretty good neighborhood, like a Brentwood or a Metrotown or something that's really, really desirable. Like one bedrooms there, even the small ones that are less than 600 square feet are now $2,800, $2,900 a month. So posting one at $2,400, I think you're asking for a couple hundred applications.
Let's call it a wrap, Denny. We're in late June. This is our market update for now. If we can help you in any other way, don't hesitate to reach out to us. You can get Denny at gdrealestate.ca or James at gdrealestate.ca. Those are our direct emails. Reach out if you have any questions or we can help in any way. We'd love to hear from you.